Good morning and welcome, Pick Radio News Hour on this Tuesday. Joe and Jason, soon to be Jason, he'll be here in a little bit. This is truly the blind leading the stupid as once again lost my glasses in the Atlantic Ocean on my vacation. And, well, you know, when you're as blind as I am, you just can't get them off the rack. But I got an email saying my glasses have shipped. So hopefully in the next day or two, I'll just be stupid instead of blind and stupid. Our toll-free number, 800-951-0592. The website at allamericangold.com. And, man, I know, like, the year of chaos is here, and I had no idea this is what we'd be looking at. Rumors starting to circulate. Where is Joe Biden? Is his health much worse than we thought? A lot of circulation about it. I'll say this. If we don't see him soon, is Kamala Harris going to take charge? We'll have to wait and see. Fundraising, right? Everybody's raising money. And I'm going to tell you this right now. I have no idea who the next president is going to be. Unfortunately, I have a very good idea of what the economy is going to look like for whoever that unlucky person is. And today we got existing home sales, and I've never seen a number this low for the month of June. This is a June number. June, a major selling month, right? April, May, June, July. Those are the big sales months. The lowest monthly sales. Now, unfortunately, we only can go back to 1999 because apparently that was the only, they didn't really keep records like that. I don't know. My guess is they did. They just changed the way they did it. But it's the lowest June sales ever. Below 4 million. This would mean, like, when you talk about sales, what would sales be like in October, November, December? I mean, down to like 3 million? I mean, this is incredible. The lack of home sales out there, and this is the existing home sales. This was the big number. Again, below 4 million, 3.89 million annualized. We're going to see home sales fall to, I don't know, could we fall all the way back into the 80s? Is that possible? I guess it could be, because guess what? Home prices rose again to a new all-time record high for existing homes, $426,900. That is a new record for home sales. But here's the interesting part. Sales below 100,000. Okay, so, I mean, I don't even know what that would be. Maybe some motorhome, what do you call it? I've drawn a blank here. Like a mobile home that's not so mobile in a Hurricane Alley or something, down 27%. Sales below 250,000. Down 18%. I mean, these numbers are enormous. Below 500,000, down 12.5%. Below 750, down 8%. Under $1 million, down 2%. The only thing that grew, sales of homes over $1 million, up 3%. But you can, obviously, why are sales down on these lower categories? Because they don't exist. By the way, inventories, the highest in over 4 years. So inventories starting to creep up here. Now, it's still, 4+ months supply of inventory. But it's been, like I said, over 4 years since there's been this much inventory. I don't know what's going to happen with homes. It's one of the things that I don't have great visibility on, but I will say this. It can't continue at the rate it is, and there's talk of home prices Are they going to start falling and falling, 10, 20, 30, 40%? I don't know. It's hard to say that because, like BlackRock, I mean, they own, 300,000-400,000 properties, right? Wall Street owns so many properties out there, but a number much worse than expected on the existing home sales. And again, inventories rising. That'll be something. If all of a sudden we start going back, remember the financial crisis, started with homes. If we're going to run into trouble here, our home price is going to fall. They haven't fallen yet. Listen, up another 4%. They haven't fallen yet. The problem is most of the inventory that's out there is just sitting out there, right? Nobody. You say your neighbor's house sold for, $700,000, $800,000, $900,000. You want $700,000, $800,000, $900,000. Nobody wants to pay $700,000, $800,000, $900,000. It's going to be interesting. It's just one more thing to kind of keep our eye on as we watch this economy. We're going to get GDP, right? We're going to get GDP on Thursday. And then, of course, we're going to get that inflation number on Friday. So make sure you get your gold put away because, again, I'm pretty confident here we're going to get a lower inflation number, which, of course, means rate cuts. And then, of course, the GDP number, the highest they're looking at is like 2.5. A lot of people got 1.5, but, so let's call it 2%. Again, if it's in that, heaven forbid it's with a 1 in front of it, you can definitely see the rate cut story really pick up steam. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason's coming. He's working through a few things, but he'll be here at some point today. But right now, let's take a look at the market as we wait to find out where President Biden is or isn't. The Dow's up 30. The S&P's up 15. The NASDAQ's up 100. The 10-year note at 4.23. Crude oil's down $1.50. I don't know what the reason is. I've got a pretty good idea. Demand is starting to suffer here. But all the way down to $77, I guess that's going to be good for the inflation front. Gold's higher today. Not surprised. Like I said, I think gold is establishing that new higher low. And it looks like the new higher low, at least for right now, about $100 higher than the old higher low. So remember, the old higher low is right around that $22.80. We've tested $23.80 right now. Gold, $24.06 right now on gold. Silver, right at $29. The currency markets, major intervention by Japan. They've been throwing everything in the kitchen sink at it. The yen down to 156, and we'll see how much firepower do we have. We won't know officially how many tens of billions of dollars the Japanese spent until the end of this month, but I think it's a new record as far as intervention on the Japanese currency. We've been telling you and telling you and telling you. You need to really be careful out there. All of this money sitting in your bank accounts, your IRAs, your 401ks, your money markets. Boy, if you missed the money market shows that we did a couple of weeks ago, you need to go back, go to our podcast, find them, and listen. It's something where the rules keep getting worse. All of those places I just mentioned, you don't own that money. It's not yours. I know that makes you upset. Yes, it is. Yes, it is. No, it's not. Legally, it's not yours. Listen, and this has been established before the United States. Banking laws existed way before the United States was a country, by the way. And the whole world operates on banking law. Not to mention what our own government does, i.e. Dodd-Frank, and the rules that have been put into place. That the next crash, see, they set up this boom and bust cycle for us all. Don't we love it? You know, go back and really started after 1971. Yesterday we talked about the longest ever bond yield inversion ever. Well, what were the longest ones before that? Before this one? Well, the 70s. The 87 crash. The financial crisis, right, which was what, 07, 08. And then the Great Depression. Those are the big ones. And we've passed them all. Here's the thing. They've gotten smarter and smarter and smarter. And now have gotten it set up to where you won't have access to what you think is your money. At any point, they can just tell you, hey, you know what? Oh, you want money? Oh, you want to sell your stocks? You want to sell your bonds? You want to get your money out of the money market account? Here's a penalty. That's one tool that they have. There's a penalty. They just anything they want. It's all like, well, they only can, it's not like a credit card, right? We know the credit card, right? It's about 4%, because everyone's got the rewards cards, If you got a rewards card, believe me, whoever you're using it with, they're paying 4%. They can pick any percent they want. 10%, 20%, 50%. They can also go to the no card. What's the no card? The no card means no. No, you can't. You can't have your money. You can't sell. You can't get out. And now for money market accounts, they've added a new rule. Boy, if it breaks the buck. So let's face it, by the time it breaks the buck, they've already done the penalty. They tried that. That didn't work. Then they said, no, you can't have your money. That still didn't work. Don't worry. We're just going to dilute it. What does that mean? Well, maybe, let's just say you had $100,000 in there. Well, gosh, it broke the buck. You no longer have $100,000. Now you got 90. Well, can I have it now? No. They keep breaks the buck again next one. Now you got 85, 80. These you have to understand. That's how it's set up. Believe me when I tell you. I'm not making it up. That's how it works. That's the new system. How much are you willing to risk losing? That's really the question here. That's why we keep talking about our friends over at YRefi. Any of you listening, you got over $50,000 sitting around in some of these accounts, call these people. At least do the research. Figure out, okay, you know what, I like that. Or maybe you don't. You get up to 10.25% fixed rate of return. Not correlated to the stock market. What does that mean? Doesn't matter. I mean, listen, the Dow's at 40,000. S&P's at 5,500. Pretty good. Till it's not. Doesn't matter what Wall Street does. Doesn't matter what the Fed does. You can use it as income, too. For a lot of people, hey, you know what? That may not be a bad idea. Right? If they're going to lock up all my other stuff, I need something that gives me some income. Check them out. Again, you got to have a minimum of $50,000. You can use your existing IRAs, money in your bank accounts, money markets, you name it. Look it up. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at Why refi 24? Now, we got news about existing home sales and how low they are. Polaris. I love Polaris. If you ever had a Polaris, who doesn't love a Polaris, right there? These are your ATVs, jet skis, all that, the leisure fun stuff. Said that sales have cratered at Polaris and saying that the second quarter missing Bloomberg estimates, sales were down 12% year over year. On-road sales down 20%. Marine sales down 40%. I mean, these are huge, huge numbers. UPS, they also missed earnings today, saying that, well, again, everything costs more. We got to pay our drivers more. We got to pay our workers more. The insurance on all these vehicles, you name it. They said the revenue is going to miss by several $billion. Their stock is down today. I think it was the worst day for UPS, if I'm right on this, in 15 years. Coke, they beat earnings. Of course, again, the story there, though, sales here in North America continuing to struggle. But I'm not surprised by any of those numbers as we continue to watch what's happening in the U.S. economy as the consumer, again, becoming more and more cautious. And then there was a report out about what it costs to be middle class. And it's something where if you use the criteria here, the middle class in America, I mean, it really almost doesn't exist anymore when you look at how expensive it is to be middle class. And especially, and they're talking in the big cities where most people live. I mean, let's face it, being middle class in Atlanta, you need to make $170,000. Baltimore's a dump. You need to make $181,000. And by the way, it's going to be Baltimore and the surrounding areas, right? We'll get to, Boston, 210. Charlotte, 154. Chicago, 166. Dallas, 166. Denver, Aurora, Lakewood, $198,000. You need to make $200,000 to be middle class. Houston, 150. Detroit, $143,000 right here in the Valley of the Sun. $166,000. These numbers are insane. I mean, these were numbers going back to like 2000. You were probably like in the 10% range, right? You're the richest 10%. Now they're saying this is just what you need to be middle class. And again, you start thinking about, homes, the price of a home, the price of an automobile. By the way, auto repossessions skyrocketing. And I don't mean to laugh, but these numbers, I don't know how much longer all of these things hang on when you're talking about, hey, a lot of people now can't even afford to get a car, can't even afford to keep a car. They're talking about the average car now over 12 years old. I guess that's a credit to the car makers, right? Hey, the car, I remember back in the time when a car would only last 5 years. But the realities are monthly payments are taking up as much as 30% of people's budgets. I mean, that was what it was supposed to be for your shelter, right? Shelter was supposed to be 30% of your budget. Not owning a car, right? Not making a car payment. Of course, listen, when you throw the insurance on top of it, then you got, not to mention putting the gas into it. No wonder why they're saying half of people the ages from 18 to 30, I think it was 35, over half of them rely on money for their parents, from their parents. By the way, this survey is conducted every 4 months, so it's a pretty fresh survey. Credit applications, 40%. Overall rejection rates jumped 21%. So application rates, people wanting to buy a car, down 40%. People being declined for a car loan jumped 20%. You do the math, right? You guys can do math. That is a very big indicator that something is extremely wrong just above the surface here. And this is why we keep telling you, get ready here. The banks aren't safe. I know what, Joe, but they passed the stress test. Listen, the stress test really is something where they make it very simple for these banks to pass it. It's not a true test. It's a made-up test. Matter of fact, remember the living wills. J.P. Morgan, Citi, Goldman, none of them passed the living will. What does that mean? Well, if they went under, could we unwind them? The answer was no. When we get back, an item we haven't run in years. 800-951-0592. That is our toll-free number. We've got a gold item for under $100 today. I've got 175 1-gram bars. Now, these are going to come with a card. So, because a 1-gram bar, it's like, I don't know, maybe the size of a pinky nail, but it's going to come in with a card in plastic. You can see it. It really cool. Here's why I like it today. First of all, I can get them. We haven't had a gram bar of any quantity in years. But it's all about price. Right now, a 1/10 ounce American Gold Eagle, it's $300. And we're the cheapest around at $300, by the way. 10 of those, $3,000. We've got these 1-gram bars. Essentially, you would need like 3 1-gram bars to get to 1/10 of an ounce. It'd be right there, just a smidge less. But it's all about pricing. If you bought 31 gram, right, by the way, they're 95, and I'm sorry, I just can't see. I can't even read my own writing. They're $95. I looked all over the place, all the online guys. They want 110, 112, buy a stupid amount for $105. I got $95. So you get a 1 gram of gold for $95. If you bought 30 of them, that'd be almost an ounce of gold, essentially an ounce of gold, $2,850. Right? So when you talk about, hey, why do I like it? Well, that's why I like it, because at 112, where the other guys are, it's $3,360 an ounce. If you want a 1/10 ounce American Gold Eagle, it's $3,000 an ounce. These gram bars at $95. Jason, this is I think there's a half of a gram bar. I wouldn't even know what that would even look like. But one of the smallest quantities to buy gold that's out there. They come in a great little in this nice little card. Great presentation on these things. Owning a gram of gold for under $100 today at $95. We've got 175 of them. You can buy as many as you want. If some guy calls and says, I'll take them all, then, well, that's it. If you want 1, 5, 10, whatever it may be, 800-951-0592. But, Jason, this is an item, I don't know that I've sold it since you've been with us. You've been with me since 2018. It's been a long time since we've done anything with gram bars.
Yeah, I've been seeing a lot of YouTubers, and these internet shows, and then there's a lot of them are starting to pop up. Gold and silver is getting too expensive to buy, and I'll just kind of flip it. I think gold and silver is getting too expensive not to buy. You're getting warned very heavily on this show about how you better start stacking this stuff. I saw a YouTube channel, Joe, saying this one guy believes that the economy is going to explode in such a way that the only valuable assets that'll be standing during this thing will be gold and silver. He says all of it goes away. All of it goes down. All of it. Like every single thing. This guy's like, look, it's going to go right back to where things that you physically hold in your hand. If you own a cow, it has value. If you physically own the property, it'll have value. But he said everything else is just going to flatline. He said that. I mean, and Joe, it's funny because I say how many times that gold is a leading indicator, right? Well, if gold and silver sales have slowed, which they have, we haven't. It seems like we should be just rolling in customers like we had the last few years. But this gold is too expensive thing, I think, is hitting people. Well, what do they get when people really need the money? 401ks are being fleeced at record levels right now. People are selling assets hand over fist. And when it comes down to it, the things you own are going to be all that's left, right, Joe? And gold and silver is value. That's where you should hold it. It's too expensive not to be buying it.
Goldman with a big report yesterday about gold and demand, especially talking about Asian demand, Chinese demand, Indian demand, Japan, South Korea, Malaysia, Vietnam. It's an avalanche that is occurring out here. By the way, Goldman reasserting that $2,700 before the year is over. $2,700 before the year is over. And again, this is economics 101. I think Jason's got a great point. It's getting to the point where you can't afford not to have some. So here's an opportunity for all of you, the little guy. $95, right? $95 gets you a gram of gold. For those of you that are talking about, barterability, digital currency, are we going to see, right, this new currency? We all know we will. What will be the restrictions? Will I need to barter? Are they going to lock me out of my money market account, of my stock trading accounts, and they're going to lock me out of selling my 401ks, my IRAs? Am I going to need barterable material, at least in gold? I don't think it gets any better than this. And here's the great thing about these cards, because not only is the fineness, right? These are 3 and 4.9 fines, pure gold, 1 gram bar, stamped right on them. Well, they're small, but right on the card. It tells you all of it. Tells you what it is, the purity, everything. These things are going to be easy to trade with out there. But again, it's about the price. We're just cheaper than everybody. $95 today at 800-951-0592. This will not be an item we normally carry. It just won't be because what it costs and all of that to make them and do all those things, it's just not a good deal, right? I don't want to sell you a 1 gram bar for $3,400 an ounce when gold's only $2,400, right? That's why. But when it comes up, here it is. It's the first time, I don't know, maybe 8 years, maybe longer than that since I've sold one of these. Take advantage of it. Understand, too, look at what's happening. China lowered rates yesterday. Right? Gold's flying there. The homes, right? Their property problems. The largest, they just sold the richest man in China, no longer the richest man. All of his bonds backed by housing sold for 10 cents on the dollar last week. Well, it was gone 10 cents on the dollar. They're screaming for the gold. Here's the thing. My worry is this is what's coming to America next year, right? All of the problems that we're going to be facing, and then that avalanche comes on. That's why they're talking about 2,700, 3,000. Almost every major bank out there saying gold's going to be 3,000 by this time next year. Well, That's going to be why. 800-951-0592. Jason and I will be back after the break. 800-951-0592. Joe and Jason here on this Tuesday. Remember, we got GDP on Thursday, inflation numbers on Friday. I think both of those are going to be favorable. What does that mean? Lower. GDP lower, right? Below 2.5%. Possibly as low as 1.5%. But somewhere in that range is, that's just my guess is. Inflation, Friday, lower. That's how they've got it set up, right? It's going to be lower, which could be very, very supportive on the gold price here. Not to mention, where's Joe Biden? I know Craig James was talking. Craig comes on before us in Colorado. He was talking that maybe as early as Monday, you may get an announcement that Biden's going to step down, making Kamala president. I think that I don't know I don't know. It's just kind of odd that the guy's kind of disappeared since Vegas, right? They said he had COVID. Then they show him, but he didn't have a mask on, which is kind of odd when they put him in remember the Secret Service had to help him get in the vehicle and went back to wherever he's from, Delaware or what, I'm not sure where. I think it's Delaware. And we haven't seen the guy since. What would that do to the markets? Interesting thing to think about, right? There's a lot of reasons to be very bullish here on the gold price. And then how about this one? Corporate bankruptcy filings. 75 filings in June. That's huge. Just to give you perspective, the last time there was that many bankruptcy filings, 2010. Right? That was when we started doing quantitative easing and all that other nonsense and printing money like crazy. They said that the amount of bankruptcy filings are not quite where they were in 08-09. Right? That was the heart of it. But, right, we're already back now to 2010 levels. By the way, the first half of the year, 346 bankruptcy filings. So that, that's an average of like 57. So you can see the 70 number, Jason, and it's every month it gets more and more and more. And sooner or later, right, the tipping point for these banks, where's it going to be? I know this. The major banks, the top 10 major banks, are dumping all of their bad assets as fast as they possibly can right now. And it's just one more thing that we got to keep our eye out on because we've been waiting, right? How much time do these regional and smaller banks have? And when you start seeing bankruptcies going back to 2010 levels, it really, you get nervous again.
There's lots of delinquent payments at all parts of the economy, right, Joe? Credit card payments and mortgage payments, and it's all over the place now. Obviously, the commercial real estate, they can't refinance into a reasonable rate. The payment's no good. I was in a local place in Longmont, grabbing something to eat with my wife, and we at this shop. It's a newer shopping strip mall, and we're picking up the food and we're looking around, empty spot, empty spot, empty spot, empty spot, and we're like, wow, yeah, there's I don't think there's be a lot of new commercial buildings going up in this. Colorado's a booming area. To have all of these empty commercial spots in a pretty good location, Joe. So it's and as I said earlier, we should have floods and floods of people buying gold right now. And I think, Joe, we've seen that the smaller buyer is disappearing. We still get some customers. We're still getting the customers, but it's not reflecting record gold with presidential assassination attempts. We had 3 years in a row where there was some emergency and gold was flying. We had COVID. Gold went to $2,000. We had January 6th. I mean, I'll tell you right now, people were freaked out about January 6th. They thought the government was crashing down. We had farmers coming out of their fields with buckets of cash to buy gold. I mean, I never seen so much cash going into gold. And then in 2022, I had fun with my number, 222. It was all 222. He's like, hey, what's this weird number? I think something weird's going to happen. And then what happened? The Ukraine war started. And then floods, more people came into buying. And the gold price around the 1,800, 1,900, and the 2,000 level, people were still heavily buying. But, Joe, the money's there. There's still money out there, but they're just not putting it in. People, I think there's a deer in the headlights kind of thing. Everyone's waiting around to see, I guess, what this election. The whole world is waiting to see what the American election is going to be. I guess if you're going to wait till then, Joe, what's the price of gold going to be in November? I don't know if that's a good idea if you're sitting here listening.
According to Goldman Sachs, it's going to be $2,700, right? And that's kind of the thing that we're talking about here as an example. Let me give you an example. They said that if the gold price in China fell 10%, Goldman says demand would jump 20%, right? This is what's happening all over the world. All over the world. Listen, the dollar, believe it or not, the dollar's like at a record high. Well, it's off the record high, but it was right near all, record type high levels here. Why? Because I get it right. We're the cleanest dirty shirt in the laundry, right? That mentality. When this thing spins on its axis, which we know it's going to do, how high is gold going to be? I think. Listen, I'll tell you right now. I think anything below $3,000 is cheap right now, and that's hard to say because it's like it's only $2,400. Believe me when I tell you, that's about as good as it's going to get. 800-951-0592. Jason and I, we're coming right back. Wrapping it. 800-951-0592, 1 gram bars. We still got like 130 of them. We had 175 of them to start. They're $95. I went out there and I looked all around. Most of them are $110 to $115. We're at $95. It's actually cheaper than a 10th ounce right now. A 10th ounce gold eagle buying. The 1 gram bars at $95 today. Yesterday we ran the $10 Liberties, right? The half ounce pre-1933s. I'm going to keep that price. Well, gold's up 8, right? 2,406 right now. $10 Liberties 1 through 19, $12.95. 20 or more at $12.90. And then, of course, obviously the 1 gram bar buying gold for less than $100. At 800-951-0592. Bank of America is now reporting they're seeing a new surge in people not paying all across the board at Bank of America. They're saying that loan loss reserves are going to go up now, and they're talking auto loans, talking about repossessions. Auto loan repossessions up 23%. What? That's a big number. Obviously, I think they were probably pretty low. Not anymore, right? The repo man is busy out there. But, Jason, listen, these bigger banks have a lot more room than these smaller banks. And now Bank of America letting it be known that, listen, they just reported earnings. By the way, their profits were down 7%. I guess it was better. They were thinking it may be down 10. But then as soon as their earnings were over, they bought back their own stock, did all that stuff, passed the stress test. Then they announced, oh, by the way, delinquencies are surging.
I mentioned that last segment. Yeah, I mean, I think delinquencies on everything, Joe. It's a huge indication of where we're headed. It's interesting because I think if the news were reporting the economic factors honestly, if they actually put it out there for people to see, it would be on all the news right now. But with this election year, and you got the two guys pointing the fingers at each other, it's their fault that the economy is suffering. When's the last time they said this? The economy is booming. The only time they say the economy is booming is when the winning candidate or the guy trying to be reelected say, "Well, look all these great things I did." But other than that, nobody says anything about how the economy is booming. If they were reporting this thing right, Joe, gold and silver would be taken off like a rocket ship. Hearing all the guys talking about Elon Musk going to buy his own silver mine, right? He doesn't have enough silver to build all his electronic, cars and things, and they say, well, he's going to buy a whole bunch of silver. He's going to buy so much silver mines that he's going to push the price of silver to $125 an ounce. I mean, is that where we're headed, Joe? Big billionaire tycoons are going to buy up mines so that they have silver for their automobile companies and solar companies, and then they just push the price to $125 an ounce. Because let's face it, no matter what the silver price is, if you got the mine, you're going to have the supply. You won't have the middleman.
Yeah.
It's like cutting out the middleman.
And it's just really hard to fathom, because you're right. And think about this. We're going trillions of dollars into debt just so the economy stays afloat, right? If the national debt was only $1 trillion this year, what would we be talking about? GDP of what? Negative what? Right? GDP of negative what? Right? Inflation would be what? Below 2%, right? All of those things. We can't do it. All as we know how to do is to keep spending the money. That's why gold and silver are going to keep doing what they're doing. What a great special today. Whether it's the 1 gram bars at $95, the $10 libs, 20 or more at $1,290, 800-951-0592. Jason and I are coming right back.
Did you know that 70